Welcome to the BizVal podcast. At BizVal, we are passionate about empowering entrepreneurs the world over to understand and unlock the value in their business. We work with advisors and entrepreneurs to demystify the value creation process when building a business. At BizVal, we know how tough it is to grow and run a business, which is exactly why we've made valuations simple to understand, accurate, and affordable. Our unique blend of tech and touch ensures that you always receive the best service, authentic human engagement, and data-led insights to ensure that you build a business that provides you with freedom and choice. In the BizVal podcast, we showcase stories of real entrepreneurs and advisors, sharing lessons and inspiration from their journeys to make your journey just that little bit easier. My guest today has spent more than 35 years in commercial banking, Standard Bank, ABSA, Barclays Africa, where he filled numerous executive roles, client acquisition for business banking, you name it, he's probably done it. And then in his mid-50s, he was retrenched. But he didn't sit on his backside, so to speak, and wallow about. He started GCE Business Solutions, which is a banking, funding, and debt advisory firm. And that's now 7 years in. So, Gavin Ellis, welcome to the show.
Thank you very much. It's a pleasure to be here.
Fantastic. Well, I mean, I don't think a lot of listeners, and we do have an international audience on this. So, but I mean, as a starting point, you're also from what is known as or Ibai or Port Elizabeth. So,
Yeah.
we both have something in common from our background. But I think let's just start, at the beginning, Gab. Let's take us back to sort of the banking years.
Yeah.
Way back in March 1983. I'm sure before many of our listeners were even born. You joined Standard Bank, which is one of South Africa's largest banks, as a Forex clerk.
That's right.
So maybe just tell us a little bit about the journey. How did you end up in banking? And what did, spending 35 years of climbing through the ladders of Standard Bank and ABSA actually teach you through that process?
Cool. So I actually, and probably lots of us that landed up in banking, we sort of fell into banking. Banking wasn't our first choice and whatever. I started varsity wanting to be a CA and then realized very quickly I probably wasn't clever enough to do that and so on. And I also did a varsity job in the June of my first year at an auditing company. I thought, this is not for me. And then I wasn't the world's greatest student, let me tell you. So what happened is I was playing soccer for the varsity team, and then in my second year I didn't really do that well, and I only had varsity 3 times a week. So I then started working with at Standard Bank then as a teller. So I started as a
Mm.
teller, world's worst teller. I was bad, wasn't very good. I could never balance my things, and I used to work on a Tuesday, Thursday, Saturday morning, and so on. And then I flunked out completely out of varsity, and I thought, oh, what am I going to do now? I thought, okay, no Standard Bank because I worked at Standard Bank as a teller. And then I went to the HR person and I said, okay, now I need to get a job, full-time job. So what had happened is, well, my brother-in-law was a psychologist and he took me through one of those psychometric tests. And interestingly
Yeah.
enough, it says numbers, maybe not so much, but people, good at people. So of course, when I get to the bank, they put me through the same psychometric test, and I think, okay, well, the bank is about numbers. So every time a number question came up, I said, love it, love it, love it. So anyway, I got a job, as you say, at Standard Bank in East London, the small branch there. We were 18 on the staff as a forex clerk. My introduction to banking was I was with a guy for 2 days, and he was teaching me how to remember. This is my first job, teaching me how to do forex, Vostro, Nostro, and all those things. Then he
Yeah.
said after 2 days, he says, "Well, I'm going to my next job. So cheers. Here's the book. You must just do it." And I'm telling you, I did those things. And in those days, you didn't have, so you typed up whatever. I passed it to my supervisor. She would just throw back the stuff. Said it's wrong. She didn't tell me what was wrong. So I had to learn and
There
so
was
on.
no internet in those days. It was
Nothing like
manual
it.
ledgers. It was all of that
No,
stuff, right?
so you go through the thing and you think, oh, there's the error. They're not okay, and I send it back. Then she throws it back again. The point of the matter was that eventually I knew the forex regulations better than what she did because I had to research it. That's part of what banking teaches you to be detail orientated, and
Mm.
so during my banking career, then I went into the army, came back out of the army, went to Port Elizabeth. So from East London, went to Port Elizabeth. Worked in managers department then. Was a manager's clerk for one of the one of the consumer guys, and then I became the manager's clerk for the commercial manager. And when I took over, the guy that I took over from, he says, "Listen, yeah." So I worked for a guy called Barry Ferreira, and many people who are ex-Standard Bank guys might know him. He was quite a legend. He's passed on now. But he was the type of guy that he didn't take any shit. I said I wouldn't swear, but there's one swear word. But anyway, so so you would go, and he said to me, if you've got your point of view, whatever you do when you're going to Barry and you've got a point of view, just stand on it and so on. But you must be prepared, and that was another
Yeah.
thing. Be prepared for whatever. So preparation was a key. So out of that, then I went from managed department, went into advances or credit division in Port Elizabeth for 3 years. So I can crunch numbers with the best of them. So here's the number story. So no, but numbers is not what I
You
want.
fake it till you make it. I mean, from manipulating the psychometrics, I guess nowadays with AI and all of that, you probably wouldn't get away with that. But
No,
back
that's for
then you
sure.
could.
Yeah. So anyway, then I became the top credit analyst in advances. I got chosen for the bank's overseas development program out of credit division there, and so on. I finished my degree off. I went back and did my degree part time. Did my banking diploma. Also did the MDP and the EDP through UNISA Business School. So the bank educated me. Really grateful for that. Went overseas with them for 3 months. Came to Joburg. Started at Hyde Park branch as one of the managers there. Then Jan Smuts Avenue. Then I came back to PE as the head of SME for Eastern Cape. So I ran that for 2.5 years. Then I came back to Joburg. Then I ran business banking suites. So in Fox Street, ran a suite there, and business or commercial banking, ran a suite there for 6 years. We went from Fox Street out to Bedford, then I decentralized to Clearwater, close to my house. And then towards the end of 2009, they called me in and they said, no, we want you to head up acquisition for business banking for the province. So end of 2009, we're just about hitting that financial crisis. And I was saying, no, but guys, you're setting me up for a failure here. No, you've got the networks within the bank, you've got outside networks, you're the right personality. So I ran that for about 3 years, and yeah, it was in the actual fact, you look back, and that was probably one of the main changing points in my life because you got exposed in the banking world. You got exposed to everything there as well, and people would call you from head office, say, "We've got this client, go and see him, go and and all that." So got exposure to a lot of people, which then allowed me to go to ABSA and Barclays Africa as the executive head of client acquisition for their business and commercial banking division. So both for SA and then on the continent. If you'd have said to me I was at Standard Bank for 30 years, I was there for a long time. If you'd have said to me, which bank would you go to after Standard Bank, ABSA wouldn't have been my first choice. But you know what? I love my time at ABSA. It was really great. People there are fantastic, and so on. They've had a lot of bad press over the years, but I think Kenny Fichler now, with getting a lot of the team back there, he's going to do a superb job. So I had a great time, but then, of course, Barclays UK decided to leave, and with the restructure, in banking, you go through lots of restructures. Probably in 35 years of banking, I went through about 11 of them. They're like musical chairs. If the music stops, you haven't got a chair, then thank you very much, you're out the game. So anyway, then that's when I got retrenched, but we'll talk about that a little bit later, I'm sure.
100%. Gavin,
But
if I may, I just want to stop you for a second and just,
no, sorry.
just recap on a couple of lessons in there. I think
Yeah,
when we talk about banking now, people see an app. A lot of the younger listeners, but back in those days, I mean, I also had spent a number of years in banking. Little side note, my first boss at Standard Bank, who you'll know, was a guy called Graham Wallet. I mean, how's that for nominated determinism, if there ever was one? um, but so I learned, and in those days, banking wasn't just a computer system. You had to know the ledger, so it was an opportunity. You had to learn. You had to go
Mm.
in. You had to actually, like as you say, research. So you couldn't just come in and run the numbers.
Yeah, yeah.
So I think when you talk about banking now, it's a very different, and particularly retail banking, a different environment. The other thing I just want to touch on is that you spend time both in sort of back office roles where you kind of had to learn the mechanics of things. And then also, as you spoke about that shift in sort of the front office, like going out there and doing sales. Sometimes people think they're such big machines, no matter what but you learn sales, and that's the heart of any business, right? Is
Yeah.
actually selling, engaging people, all those things. So you had that full spectrum of, probably any job that you could do in a bank, you had some sort of exposure to.
Yeah.
Before I talk about the retrenchment, I mean, one of the things I just want to touch on briefly is you also did a bit of work across the continent, and I think that was mainly when you were at ABSA, so Botswana, Ghana, Kenya, Zambia, Uganda. And I just want to very quickly sort of touch on that. Through that process, what did you learn that you couldn't learn just sitting in a office block in Sandton or Joburg CBD or whatever the case? Maybe just spend a couple of minutes chatting about that.
Yeah, sure. So when I went from Standard Bank Joburg to P, I was told by somebody, listen here, the pace is going to be different down there. You can't go at the
Mm.
pace Joburg goes to, but we're sending you there for a reason to bring them up. So if they at that
Mm.
pace and Joburg's that pace, you've got to bring them halfway. Okay. Same thing in Africa. So the pace of work and so on is a little bit different there. Might have changed. Remember, I've been out of it for 7, 8 years now, but I mean, the first time we went into Africa to do what we did, we went into Gaborone. I saw more clients in 3 days that
Mm.
four account executives have seen in the last month. Physically
Yeah.
going out to see clients. They might have phone clients or whatever, but physically going out to see clients. I used to say to the guys, you cannot do stuff sitting behind your desk. You need to go. So I would fly into Africa for a week to Accra, Ghana, or wherever. Fly out Sunday lunchtime, and then meetings would be scheduled from 10 o'clock Monday all the way until Friday afternoon. And I would want and we'd do suppers with clients in the evenings and so on. We probably
Mm.
saw 20, 25 clients in a week, and so on. So that was a bit of an opening, eye opener for them. But I said, but you've got to get out there. So that was one of the things. The other things, when you get into Africa, don't go there with a know-all attitude. That because
Mm.
you're from South Africa, because South Africa does have a bad rep on the continent, that
Mm.
everybody from South Africa thinks we're the best, da 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 da, whatever. And then you go in there with this arrogant attitude. Don't do that.
Mm.
Go in there, understand their cultures. So one of the things that I always say to the guys, when we go out during the day, when we go for lunch, we go where you go, not
Mm.
to. They said, no, we can go to KFC. I said, I can eat KFC in South Africa. I said, go where you go.
Yeah.
The one time in Accra, we went to this one place along the side of the road and we ate tilapia fish. It was so burning. Mama, and I was sweating. They took videos of me sweating and they sent it back to the team. But you do those type of things to assimilate yourself into the culture, if because otherwise you can't just do it from the outside. So so we did those things. The one time I almost killed myself eating fish in also in Ghana because it came very bony, and I thought, yeah, if I swallow one of these bones, it's going to be a problem. So again, don't be a know-all. Bring their pace up, but not to the level that you bring them up, and so on. The other thing that we went into clients' businesses, they were very grateful that we'd gone. They said, "Jeepers, I must be really, how can I put it? One of the top clients because you from Joburg are coming to see me." So they were
Mm.
incredibly grateful. The other thing is they were second. Some of the businesses were second and third generation businesses. Dad was still there in
Mm.
advisory capacity, but they would tell me, but Barclays is my dad's bank. It's not my bank.
Yeah.
What are you going to do differently? You know? So we
Mm.
had to convince them that we would do things differently, etc., etc. But then you would listen to them
Yeah.
and say, what do you want differently? And try and change it that way. So you got to listen. When you go into these African markets, you must listen to them. Yeah.
Well, I think, Gavin, I mean, there's a few things in there, whether it's Africa or it's Eastern Europe or it's USA, wherever. I mean, I think the one key learning is if you're coming in as an outsider, you need to understand first. So seek first to understand before being understood. The second thing
There we
is,
go. Yeah.
one of your key learnings is just the importance of relationships.
Yeah.
And nowadays it's, with AI and LinkedIn, all these great tools and what have you, sometimes
Yeah.
people kind of underweight relationships. At the end of the day, it's about
Absolutely. Yeah,
people and recognizing and understanding people. I mean, we could probably have a
absolutely.
podcast just on experiences in Ghana. I've also been fortunate to spend a lot of time in Accra and Nairobi,
Yeah,
and
yeah,
I've also got a similar fish story in Accra. you
yeah. So
know,
you know it.
um,
You know it. Yeah,
for anyone listening, you get these dry hangers of tilapia, and they like pick it off the hanger basically, and that's what you're having for lunch. But yeah, so some interesting stories,
yeah,
but great times.
yeah,
So Gav, let's move on. Okay, so now you're sitting in March 2019, a year before COVID. I mean, none of us could have foreseen what was going to come with COVID,
yeah.
but you're now executive head, mid 50s, 35 years in, and suddenly you retrenched. Okay, so talk us a bit through that process, through that day of actually hearing that your time's up, so to speak, and what followed.
Yeah. So interesting enough, so it's a process. In a large corporate, it's a process. So there was town
It's
halls
not like
happening.
Oracle when you get a 6 a.m. email and your
No, it's
computer's
not.
deactivated.
Yeah, no, it wasn't like that. So what happened is that in the June, July of 2018, there were town halls and so on. So we knew what was coming because the scene. So there were 24 managing executives, and I was the next level down. 24 of them got culled down to 12. So we knew that something was coming. So, and I thought to myself, you know what? If I'm at 55, a white male, I'm probably going to be on the chopping block, and so on. So one of the next town halls, there were about 180 of us now, the next level. We were told, no, don't worry, there's plenty of jobs for everybody. 2 weeks later, we get Section 189 letters. Okay. So now you think, okay, now it's real. So what happens in a large corporate is that the large corporate wants to chuck that process through as quickly as possible. They want to move on and so on. If you're getting that 189 yourself, you've got to slow it down so you can process stuff.
Mm.
So in a 189 process, what you have to do is if they say, okay, this and this and this, you reply in writing. So you have to reply in writing. I gave them a 5-page email and a 12-page PowerPoint presentation about why they shouldn't be taking away my job and my team. Okay. I knew they'd made up their mind, but that's fine because then I had to slow it down. Took them 2 weeks to come back and respond, and that which they did. But by then I'd got it in my head. Okay,
Processed.
this is what's going to happen. Then you go into a negotiation process, and so on. And I managed to negotiate a 7-month sort of reassignment process where the bank paid my salary. I stayed at home. I was available if they wanted me, and but I still had access to a lot of the buildings around the country. So I actually used to go into work at Ellis Lane and work on stuff, but work on my business.
Mm.
No
Mm.
conflict of interest. I didn't take out any data or anything like that. I spoke to people then. I said, "This is what I want to do. What do you think?" And one of the things one of the execs said to me is that what do business people know you for in South Africa, Joburg and South Africa? It's about putting together large, complex lending deals. So that
Mm.
was where my gut was going, and so on. And I didn't necessarily want to just take my pension, go and buy a burger joint and flip burgers. I thought, no. So yeah, so it was a shock, but it wasn't a shock. And I was able
Mm.
to take that 7 months. In fact, what I did is I fast tracked that process. My oldest son went overseas in the beginning of 2018 to work in London. We were going in December of 2018 to visit him. I said I must know
Mm.
what I want to do by before I go. So I've fast tracked
Yeah.
that process for myself. Sometimes when there's restructures and bus big
Mm.
businesses will create a crisis so get you out of your comfort zone. So I created that timeline crisis for myself, so I'd think clearly and fast. Because there's no use like sitting around and waiting, and then 2 weeks before the 7 months are up. Now, what am I going to do? So I had a
And
plan.
what's quite interesting, Gavin, is that you didn't, as you say, you didn't wallow in self pity. You actually, you thought about it, you structured it. It wasn't like, oh, woe is me. But I think
Hmm.
just if I look at your career through the bank, a lot of people, if you've been in a bank for 35 years, okay, you were across a couple of different banks.
Mm.
If all you've done is just stayed in one job or two jobs and learned nothing new, but as you've described your career, it seemed like every 2 or 3 years you were reinventing yourself in any case.
Absolutely. Yeah.
So you
Yeah.
weren't just sitting being a forex clerk and then a senior forex clerk and then, and then a more senior forex clerk. You
No.
kind of took the opportunity to actually do that. So now this was, yes, you might not have had the safety net of a salary
Mhm.
every month coming in, but
Yeah.
it was almost just like moving on to the next thing, right?
Yeah. And to add on to that, so when I went down to PE to head up the SME center, it was brand new.
Mm.
There wasn't anything in place. So I was building a
Yeah,
business within the bank. When I
yeah,
came to back to Joburg and ran a business banking suite, I had the smallest suite. I only had 4 account executives at the time.
yeah,
I was building that brand new. I had to build it up. When I went to acquisition, I had 2 acquisition bankers in Standard Bank. I built that up to 10 acquisition bankers and 7 support
yeah.
staff. So I was continually building businesses within the context of the bank. When I went to ABSA, I was told, blank piece of paper, we don't have any acquisition capability, build it for us. So I
All
built
that.
that
Yeah.
business, you know.
Mm.
So, you know, corporates are a funny animal, as you know, but you learn a lot of stuff within corporate. And, anybody who has the opportunity to spend some time in corporate, go and do it because it gives you certain structure, certain, thought patterns, etc., etc. If your goal is to go and do your own thing, maybe just get some structure in around how corporate works first, and then go and do something. Yeah.
Yeah, there's a lot of wisdom in that, and I think they've done studies. I said the most successful entrepreneurs, start in their late 40s.
Yeah.
So
Yeah.
everyone thinks you're going to be this young VC funded, founder by 25, and if you're not a billionaire by by 30, you failed somehow, and that's
Yeah.
not the natural
No.
order of things. And nowadays, we just talk about ageism and all of that. Is this notion of a retirement age of 60 or 63 was built in the industrial age. You
Yeah.
look at people are working into their 70s, 80s nowadays, particularly business owners and that. So I just want to talk about that for a second. What
Mm.
stopped you? You touched on it, but what stopped you when you were retrenched to saying, you've been in the bank for a long time.
Yeah.
You may have been in a position where you could have said, okay, cool, I'm going to go and live a simple early retirement life. I mean, my grandfather also worked for Barclays and he retired at 55 in Plet, and for 20 years played golf and lived a very simple retirement. But what stopped you from that was probably a generation before, but what stopped you
Sure.
from going that way?
So one is these days we're living longer. At 55, you might have to live another 40 years. Your pension at
Yeah,
55 won't last. Okay.
yeah.
Secondly, I mean, you know me, and a lot of people who know that I can't just sit down. I can't sit on my backside and do nothing. I've got to be out there and doing stuff, and so on. Sometimes my wife says to me, just slow down. Just like, I mean, I'm 62 now. There's no slowing down. And we'll talk about how the business is growing. But, it was I had offers to go back to Standard Bank. Say,
Yeah.
no, come back. We'll gladly take you on. And I thought to myself, you know what? At age 55, I'm young enough, energetic enough, and enthusiastic enough to do this. If I
Mm.
go back to Standard Bank, 3 years later, there's another restructure. Now I'm 58. I'll probably get cold then as well. Then now
Mm.
I'm getting more towards now the bitter and twisted, sort of, oh, why are they getting rid of me and all that nonsense, and so
Yeah.
on. Because, and I thought, no, I must go and do this thing and see where it takes me. And
Mm.
it's taken me to great places. Mhm.
Fantastic. So let's start a bit about that. So
Yeah.
we're in what's it, April 2019, and
Yep.
you start GCE. I mean, it's obviously your initials, Gavin. I
That's
don't know what
it.
the middle name is, but we can leave that one out.
Yeah.
um, but tell us the elevator pitch about GCE. I think you touched on it a little bit earlier, but what do
Yeah.
you actually do, and where did the idea come from?
Okay, so first of all, the idea came from I wanted to do something that would stretch me intellectually. That where's my expertise and so on. I touched on it earlier. Didn't want to go and flip burgers. I thought, no, that's not me, and so on. So so I said, okay, so what can I start that also doesn't need a hell of a lot of capital to start and so on. And as I said, I researched this thing. I chatted to a lot of people. Essentially, what we do is an extension of what I did at the bank. We just do it for our own account now. So when we ran acquisition teams, we were trying to get clients to come from one bank to the bank that you were at. So what we do exactly the same. We lead with debt. We're a banking, funding, and debt advisory firm, and essentially we help companies source funding. I mean, that's what we do across all
And if
the.
I could just jump in very quickly, in South Africa, that concept was relatively new. If you look in the US, we do a lot of work. They have what they call the SBA, or the Small
Yeah,
Business Administration
yeah,
loan program, and there's a ton of these kind of let's call it advisors helping people get the best chance of actually getting the loan or the funding that
yeah,
they need. So
yeah.
so did you when you started this, was it were you looking at models elsewhere in the world and seeing what was being done, or was it just kind of you saw a gap in the South African market, thought, okay, let's create something to fill this gap?
Yeah, I think a combination of all that. I did research. You can do better research now with AI and so on. But then, you Googled and whatever. Now you do. When you say I Googled it, now you do. I Chat GBT'd it or so, whatever. So and that. But yeah, I did research out of Australia, research in the UK, research in the US, and so on. Having access into Barclays UK, I went across a couple of times to the UK. Their brokers are not a dime a dozen, but there's a lot of broking firms that are there.
Mhm.
I want to make a distinction that we are not a broking firm. We don't
Yeah.
we're an advisory, a debt advisory firm. We structure things properly. Brokers will
Mm.
just take your stuff and then send it wherever they can and hope to goodness that somebody will provide
So you're like
funding.
an independent advisor almost, as opposed to
Yep.
a broker. Yeah.
Yeah, absolutely. So that's a core. We lead with that. We help clients. I mean, I'm part of a networking group, and there's been some chatter on that about they're not happy with their present banks and so on. And I'm helping some of them just transition across to other banks that where they feel they're already feeling, even in the onboarding process, they're feeling much happier and they're feeling, loved, if I can put it that way, that type of thing. So, because banks unfortunately have got so big and they've got so impersonal that the personal touch for the smaller businesses, and I don't like to call businesses small business because if you run a business, your business is big in your mind, so
Yeah.
I don't like that terminology. But yeah, so and the other thing that we help the clients source the right funding for their business, and not just the easy funding, because it's
Mm.
easy to go out there and get this easy funding where you're going to pay an arm and a leg, and before you know it, you're in trouble. So
So in
we
some
we
ways, you're
advise.
almost bringing old school back into to banking. I mean, I'll share a quick story. I remember going with my dad when I was, I think, 17 years old, to his bank manager in Kempston Street or Kempston Road in Port Elizabeth, and
Yeah,
applying for, I think it was a 2,000 Rand student loan, to pay for the books in my first year of university. And that the bank manager knew him. He had a relationship with him for
yeah,
5, 10 years. And my dad
yeah,
was at that stage sort of a solopreneur. So, he sat down and he said, Roger, and I was there, and banking's not like that anymore, unless you have a Swiss bank account, maybe it still exists there, but you were bringing that back in, the relational component,
yeah.
actually understanding what was right for the business, first and foremost,
Absolutely.
right?
Yeah. And the other thing is, so after 35 years of banking and doing this for 7 years now, we have relationships in all the banks. And it's
Mm,
important that most of those relationships are people that either work directly for me or knew me
mm,
from the banking world. So we know where to go. That's the big thing. If you don't know where to go, I mean, the one client that
mm.
we're busy transitioning across now, she was trying to go to this bank and it got hold of the call center. No feedback, no nothing. I said, no, but we'll help you. And we got the bank out within 2 days. They were out there and they're already like getting banking accounts opened, etc., etc. And that was from
Yeah.
Monday to now that they're busy. But you got to know the right people. So again, we spoke about it earlier. It's about building the right relationships. And
Mm,
a client themselves can't build multiple relationships across the banking and the alternative funders. We do that.
mm,
So we know
mm,
where to go and so on. I mean, if they need whatever type of funding they need, we've got for a company, we've got access into anything that you may need. We can source it for you.
It's like going to, I mean, use an analogy, it's like going to your family doctor. Okay. And even that world has changed nowadays. The family doctor knows you, they know your history, they know what
Yeah,
you're doing.
yeah,
And if you need a
yeah,
specialist podiatrist or a radiographer or whatever, they've got access to all the right ones. Okay.
yeah, yeah.
But let's just talk a couple of things, Gav. So I just want to understand first and foremost, you've touched on it, but who's your sort of primary target market with GCE? And then
Yeah.
also, I want you to just touch on, you're not the only debt advisor in the country now. I think, when you started, it was quite novel. There weren't as many people doing what you're doing, but what makes you different specifically? So talk about your target market, who you're chatting
Hmm.
to, who's your ideal
Yeah,
client, and then what
yeah.
makes you different.
Okay. So our target market is really the business and commercial banking markets of what the banks, how they define it. So typically it's family-owned businesses that are up to, say, 2 billion rand turnovers. We don't want to do listed companies, and we don't want to do that for a reason. Because we don't want to go and sit across the table in a board meeting and try and sing for our supper. I always say you never know who the sheriff is in the room at a listed company, and sometimes the sheriff isn't in the room, but there are people acting like the
Mm.
sheriff, and so on. So we don't want
Yeah,
to do listed companies. If a listed company comes to us and says, "Listen, here, Gavin, yes, we want to use you," then we won't say no, but we're not going to actively
yeah,
go and look for that. Okay. Typically, it's probably the target market from about 20-25 million turnover all the way up to the 2 billion. But the sweet spot is probably about 500 to 750 is
mm,
turnover business. So a lot of those businesses, you'd be surprised, are still they started off in a garage or whatever, or a small little industrial, lockup thing. Now they've great. The bookkeeper that they've got is still the same one that was with them there. They don't understand high finance, if I can put it that way,
yeah.
and how to structure stuff. So that's where we can add a lot of value because
Mm.
we come almost like a corporate banker to a client that can't afford that. They won't be able to afford that. You won't get that anyway because the way the banks are segmented, and so on.
Yeah.
So that's our ideal target market, and a client who understands that they need help and they know that they can't source what they need themselves. I had a conversation with a client the other day, and he needs help, but he says one of the things, personal sureties are off the table. Won't get that. I said, I'm sorry, in this market, are you making the decisions? Yes, I am. So you want somebody to back you, but you're not prepared to back yourself. So, so we understand that. We've had those conversations as bankers on the other side of the table. So again,
So you know
it's about
exactly how the decision-making process in credit and what have
yeah,
you works, and you're able to
that's
bring
it.
that to the table. Yeah.
Absolutely.
Gavin, I want to
Okay,
just jump in and sorry to interrupt
no
you, but
problem.
one of the things I just want to touch on, and because it's a value that I guess aligns between our business and your business, and that's this notion of independence.
Mm,
So can
mm,
you maybe just spend a minute or two just talking about your view on independence as
sure.
GCE and how
Yeah.
that actually translates in practice and why it's important.
Yeah. So one of the initial conversations we have with the clients, we tell them we're an independent debt advisory firm. So
Mhm.
how we get paid is we get paid by the client and not by the banks or the funders. And that's very important because we work for you as the client and not for the bank or the funder. We
And that's
have
the fundamental difference between you and a broker often, right? Is the
that's it.
broker takes a commission, so to speak.
Yeah. So we don't do that. We often have fights with the banks. We have major fights with them, to say, come on now, the way we've presented it. So when we present a proposal to the bank, that's the thing as well. We write a funding proposal that looks exactly like a bank's credit application because we
Yeah.
know so we take the client story and we convert it to bank speak because that's often where the problem happens. The client's trying to
Mm.
tell the banker his story, but the banker hasn't got the experience levels to understand that. Okay, so
Mm.
we convert that. The bankers love us because they hardly have to do any work, and that. So we are
And I
fiercely
don't have to pay you. So-
no, 100%. Look, at many of the banks, they say to us, but we don't pay anyway. We are very different to a mortgage originator. You go for
Yeah.
a home loan, mortgage originator, the banks will pay them. That's in our world, the banks won't pay. I mean, when guys came to me at when I was running acquisition, and they did say, oh, sorry, we won't pay you. So we understand that. So that's why that model is like it is, and so on.
Mm.
And we work on. So our structure works is we work on a work fee for 90 days, a 3-month work fee, and a success fee. And there's psychology around why there's a work fee and a success fee. So, about, you value what you pay for. We view ourselves as professionals, so we should get paid on a professional rate for that work that we're doing. If you want us to work on risk and somebody else comes and says, well, we'll pay you for your work. Well, sorry, the one who's on risk and so on might get bumped to the backwards.
It's skin in the game, right? So it's
Yeah,
also a
yeah.
natural client selection process. If somebody realizes, "Oh, we have this need,
Mm.
and we're paying for professional advice," and you just take the insurance sales. If you
Yeah,
look in the UK, it's like all IFAs. They can't take commissions,
yeah,
as opposed to the
yeah,
South African insurance model, where historically it was, you
yeah,
sell the product with the highest commission.
yeah.
And so that independence is critical, but it's also,
Yeah.
as you say, it's a filter on the client and their intent. If they're prepared
Yes.
to put out an amount of money for you to run the process, is that they're
Yeah.
serious. They're not just
Yeah.
fishing in the hope that
Yeah.
maybe a whale bites, so to speak, or,
That's
or,
it.
or a shark or whatever it is. Yeah.
And as well, what we do is that obviously people come to us because a lot of their relationships with their present bank have failed. They feel that they're not being heard. But we've also gone to the existing bank as well and said, but this is the client. I mean, we moved the client up from where it was segmented to another segment because now the
Mm.
bank understood what size of the business it was,
They were just in
etc.,
the wrong.
etc.
They were in the wrong service department. Exactly. Yeah.
That's it. Yeah,
Yeah.
so if the clients want us to negotiate on their behalf with the banks, with their existing banks, we will do that as well because we know how to talk to a banker, you know. I mean, clients sometimes they try
Fantastic.
and talk to a bank and they just get pissed off because the banker's like,
Yeah.
"Ah," you
There's
know.
your second. There's your second swear word.
But they
You're doing
mild
well.
ones. They mild ones.
Exactly. So, Gavin, I want to we've got about another 20 minutes, and I want to talk about two more things. The first one, I want to
Yes.
talk about the state of funding in South Africa.
Mm. Yeah.
Um, so I want to zoom out. So South
Yeah.
African businesses often feel like, funding is hard to get, and the banks will lend you money when you don't need it, and when you really need it, they won't give it to you. So they're seen as being very risk averse, as opposed to, let's kind of take a view of banks in the US, for argument's sake. Okay, but I want you to just touch on a couple of things. From where you sit, what's the actual state of play? And then secondly, if you can, if there's a business owner sitting in the car or listening to the episode or applying for funding, can you maybe just talk about what are some of the sort of most common reasons why, business owners struggle to find debt, I'm sure, or funding or whatever it is they're looking for. Maybe state of the play on business lending in South Africa, and then
Yeah.
what are the big reasons that business owners kind of fall over at the post, so to speak.
Yeah. So obviously you have to understand how banks make their money and so on. So we put money into a bank, we invest it, via savings and whatever. The banks take that money and lend it out. Okay. So if you're the lender or if you're the saver, you're quite happy that they're not taking like cowboy risks. Okay.
Yeah.
But they've got to lend it out judiciously so that they make a fair return so that they can make money. Okay. But having said that, the appetite out there is there. You just got to know where to look. I mean,
Mm.
we've taken clients a 10 million rand overdraft facility where the present bank was wanting to reduce that facility. We took it to another bank. They looked at it completely different, went from 10 million to 30 million overdraft. Okay, so
Mm.
so it is out there. You just got to know how to look and you got to know how to put your story in the correct sequence, if I can put it that way. Okay, so that's where we come in. So it's about telling the right story. Are you and as well, are you funding ready? So in the last since the beginning of the year, there's been a lot of stuff out in social media about fundability. Are you funding ready, etc., etc. We've actually developed a fundability masterclass workshop about how to get you funding ready, because we understand what the banks look for, and so on. So if you go too early to a bank when you're not ready, the bank's going to say no, and then they get a jaundiced view of you. Okay, so um,
Mm.
that's and there's a saying in the banking world: your best chance at credit is your first chance. So you must make sure that you're ready to go there as well. The other thing that in South Africa there is not a great startup slash venture capital market in this country. You know, in the US, you've had experience there and you've seen what that world is like. The US venture capital market will say, I'll invest in 10 companies, six will lose the money, two will break even, and two will make big money. You know,
Yeah.
then they're happy.
It's
But
probably 100 companies, and one will make big money, five will break even, and the rest will lose.
I'm being kind to them. But here we the venture capital market, and I'm happy to have conversations with venture capitalists if they that are out there. They don't necessarily want to invest in companies that are pre revenue. Okay, so they're not making money yet. They will invest in companies that are post revenue, making money, and they say we'll invest in you and we'll 10x your business. Then that's
Yeah.
so that's and clients don't understand that. We're busy with a client right now. He's got a great idea, but unfortunately it's an idea. Banks, venture capitalists, etc., don't fund ideas. You've got to have something concrete. So typically you must be running for about a year, have some financials, preferably maybe making some, even if it's a small profit, not be insolvent and all that stuff. But there is stuff out there. The banks have a certain market. These alternative lenders are there's good alternative lenders out there which have a place in the market. We
Mm.
we advise our clients quite heavily about what that looks like, how it looks like, how what happens in year
And
two.
then often that's a bridge, right? Because that alternative
And
lending can be expensive. So I think
it
we see
can.
a lot of that customers almost get trapped into that,
They do.
not
Yeah.
realizing often that alternative funding should be there for a period of 12 or 18 months just to get you to a point.
Well,
And
not even
then,
that. We tell our
yeah,
clients sometimes the bridge funders, I mean, they're going to charge you 2 to 3% a month. So if you can give
yeah,
up 24 to 36% of your profit just on debt and loan repayments, we say to a client, if you need R1 million to do something right now that you'll get payback in 2 to 3 months, then that's fine. And your payback is
yeah,
1.5 million. So you're going to make 500,000 to
yeah,
to it costs you say at 2%, it's going to cost you max 60,000. So you're actually going to make 440. If you don't have that,
yeah.
then the
So it's
access to
about
that
unit
money.
economics at the end of the day. It's right back to the basic principles of are you making enough money from every sale to cover your costs and the debt
Absolutely.
that funds that, right?
Yeah.
Yeah.
Yeah. And then the next one that you asked is about, okay, for guys out there listening in the car, what are some of the things that maybe why applications or funding requests fail? Those type of things. You
Mm.
want to, okay, so one is
Yeah, let's
obviously,
dive into just what are the three or four big things, I think
yeah,
that's
yeah.
really useful and practical.
Yeah, so I've touched on it. You're not funding ready. Okay, so you're too early in the process. Secondly, your financial information is just not where it should be. And a bank looks at that and says, how are you running this business? You've got no management accounts. How do you know what's actually happening? So
Mm.
you need to get proper you know systems in place to make sure that you do that. And in our ecosystem, we have access to outsourced CFOs, et cetera, et cetera. So again, if it's
Well,
too
even basic
early,
bookkeeping often isn't in place. People just run
no,
off a bank statement and there's no,
ab-
tax returns
a-
haven't been filed and there's
absolutely,
no Zero or
yeah,
Pastel or whatever platform you're using.
yeah.
Ledger. Yeah.
In fact, we had a client the other day, and he runs off zero, and he says, "I said, have you got management accounts?" He says, "No." I said, "Well, just go into zero and ask it. It's there. You just have to press the
Yeah.
right button, and you get it." Oh, he didn't realize
Yeah.
that. So
Yeah.
yeah, so there again, structuring your debt facility in the wrong way. So are you funding a lot of like assets with short-term working capital? Because eventually that will crowd out what your overdraft is needed for and so on. Um, yeah, so interestingly is do you know why you want the money? Okay.
Mm.
I can give you stories when I was right in the beginning of my banking career. Guys would come to me and say, you know what, on a Monday morning, I had a braai with a mate of mine. He's got a business the same as mine, he says, same as mine. He's got a 5 million rand overdraft facility. I only have R1 million, but my business is bigger than his. Well,
Yeah.
how do you know that? And B, how do you know what security that guy has given? He's probably hocked his house, hocked whatever, meanwhile, yeah, and then you'd say, why? Well, just because my mate's got it, I want it. So understand your why is very important around that. The other thing is that we sit with clients. So one of the things that, as I say, when we structure a deal, so we sit and we work out what their working capital cycle is,
Mm.
and their cash conversion cycle. We sit there and we say, okay, so tell us if you're a manufacturing business. So from day one, when you order the stock, okay, how long does it
Mm.
take to get here? When you
Mm.
do, how long does it take to convert that stock that you've got into a finished good? How long does it then take to sell? And you might have orders for it, okay, but how long does your debtor take to pay? Is it 30, 60, 90 days? Work out what that looks like. Then suddenly your facility is not 5 million, it's actually 10 million or 15 million because you order
Yeah.
stock now, you're not going to wait 120 days until you get the next stock order in. So you order stock now, and then you might want to order another one
But
in month.
I guess, Gavin, I mean, the point around that is banks ultimately are managing risk. So they
Yep,
want to know from the business owner that the business owner understands their business model, and the risks associated with it. Because if
yep,
that, it's not just, oh, I need money. You need to be able to, every point in your story needs to back that up. And you need to demonstrate to the bank or the alternate lender that
mm,
you understand how to manage those
absolutely.
risks. And
Yeah,
essentially, I guess what you're saying is all these preparations are proof points and demonstrations of you as the business owner understanding what those risks are. It's like if you go skydiving, you say, I'm not going to worry about having a secondary parachute, whatever. Listen, I'm not going with you as as your, let's call it, twin companion.
yeah,
At the end of the
yeah,
day,
yeah,
you need to understand those risks.
yeah. No, 100%. And then, also how is your balance sheet structured? Do you have the right structure for the balance sheet? I mean, let's face it, over the years, the South African's business owner sport is how to make sure that I pay as least amount of money to the taxman. Okay.
Yeah.
But what that means is you're not retaining income in your business because
Mm.
you're taking as much as you can out. So now you come to me and you say, okay, I want X. Your balance sheet doesn't support that. Yeah,
Yeah.
but. We say no, but you got to. I mean, you'll see it when you do your evaluations all the
Yeah.
time. Okay.
Shareholders loans or directors loans, they push the tax burden. So it's a balance sheet structured around minimizing tax rather than a balance sheet structured around optimizing value. And
Absolutely.
and
Yeah.
100%. It's the same when it comes to business valuations. We see that all the time. And it's a
Yeah.
big red flag for the banks is when they see
Yeah.
big loan accounts, no matter.
Yeah.
I'm not saying people are tax evading, they're doing it in a legal way and they're paying
Hmm.
the right
Yeah.
interest and what have you.
Yeah.
But it's a big issue.
So one of the things that when I was a banker and I would chat to a client and he would come in and say, okay, and I'd say, no, you can't. Your balance sheet's not good enough. He says, well, what
Yeah.
must I do? I said, you need to retain income. It's going to take you a year to do that, but it'd come back to the next year. Here's my balance sheet. And I'd say, yes, now we can do it, you know.
Yeah.
But the problem is that the business owners not don't necessarily take your advice. So we do have a service where we sort of act as the I spoke about sheriffs earlier. We act as the sheriffs and the accountability managers. So again, we're busy working with a client down in Cape Town where we are getting them to a fundable perspective. And the problem is they've got
It takes time, right? It doesn't happen
it does.
overnight. Sometimes you need 6 or 7 or 12 months to prepare before
Yeah.
you
That's
apply.
it.
Get your
And
chances right. Yeah.
no. And we've given them a sort of optimization plan, what to do. And the thing is, you can give the guy as many plans as you want, but then business happens, life happens, and he doesn't follow through. But if we're there every second week saying, okay, has this happened, that happened, and so on, then he says, okay, now he needs to answer to that, and he can't just say, oh, just didn't want to do it. Well, I don't think we charge for that. So, if you didn't want to do it, you're still going to pay me my fee, So, yeah. Yeah.
Yeah, I think these are super practical advice. I think we're gonna have to have another podcast at some point where we just kind of really drill down into this, even a workshop perhaps,
Yeah. Yeah.
but we've got about 5 minutes left, and I want to just cover two more things. We keep about 2 minutes for what we call our rapid fire round. But just to close out,
Yeah.
you've got a wealth of not just business experience, life experience, and I want you kind of just, 7 years in, you're an entrepreneur now. I mean, I think going back to those early days, there were always those seedlings of entrepreneurship, right? I mean, yeah, from your university days and hustling and all those things. Yes, it might have been accidental that you actually became an entrepreneur, but I think what are the one or two key lessons you'd want to pass on to somebody who's kind of thinking about making a corporate to own business leap? And anybody sitting here today who's listening in and has just been made redundant or is fearing being made redundant, what would you say to them right now?
So for the guy in corporate, um, you know, what happens in corporate, whether you, and in banking, you normally get paid on the 20th of the month. Whether you do a good job, bad job, or you don't even pitch up, you might be on holiday, you're going to get your salary. On the 20th of the month, it's going to come through. And the chances are you might get a bonus at and so on. Now, when you go into your own business, you've got to create that salary. It is not there that, it's not just going to come to you. Um, and you've got to get out there and hustle. I mean, one of the things that I did, in the olden days, when the Vikings used to go and attack countries, they used to burn their ships because they said, "Listen, we're not going back." So I never took access to any of my pension because I said I need to make this work. I need to hustle. If you've got a back, something that is backing you up, you're not going to do it as well as what you should do.
Failure is not an option, right? Yeah. So you almost
It's not
ring
an
fence it and
option.
say, yeah, yeah,
Yeah, yeah.
yeah.
The other thing for the guy that's been as a corporate, I've got many friends that have come to me and said, I want to leave and whatever and so on. I said, you know what? If it is so bad that it is affecting your health, etc., your mental health, your physical health, and so on, yes, then leave. It's not worth it. Okay. But if it's still fine, and just stick it out as long as you can in corporate, because remember, as long as you can, then build your pension, etc., etc. So stick it out as long as you can.
As an
Once again, but
entrepreneur, what's the one
yeah,
piece of advice you'd give to an entrepreneur? I mean, like,
yeah,
thinking about
okay,
that leap.
yeah. So for an entrepreneur, you've continually got to be looking at how you can also reinvent yourself, look for new markets, look for, I mean, so in my world, so one of the things is, my network is big and your network is like your net worth, okay? But you only have a certain amount of people in your network. You continually got to be building that and so on, and talking to people who might have a need for your services. So that's what I would say to an entrepreneur. I mean, it's easy now to research it, to say, and I've done that a couple of times on my own business. I've said, okay, so I want to do this, I want to do that. How would I do it, etc., etc. Look, I say employ in inverted commas. So I don't have salaried people with me. We have independent contractors or all mainly retired ex-bankers, and so on.
Yeah.
So they work on a commission basis. So again, it's about how do I push them on the basis that they could not, they don't have to work, but it's about, they want to feel part of a community. They have lots to offer, and so on. And I think the
I
guys,
think Steve Jobs probably sums it up best. I think it was his Stanford commencement address. I think it was back in 2009, if I remember. He said, "Stay young, stay foolish, or stay curious, stay foolish." And it's this notion of don't rest on your laurels. You got to
yeah,
keep working at it. The market's changing, and no matter what your age is on your birth certificate, is you got to keep reinventing yourself, listening to clients, evolving, building relationships. I
yeah,
think that's the
that's it.
crux of it, right?
I mean,
Yeah.
I'm 62 now. I have no plans to slow down. My next age sort of target is what's happening at 65. What does it look like? Probably go to 70 and maybe 75. We'll just see what happens, So,
Well,
yeah,
so as long as you can write off that round of golf as a business expense, you might as well keep going.
absolutely. Yeah, yeah, yeah.
Gavin, I
Yeah,
want to
and then
just
and
end. We
then
went a little.
just a word
Yeah.
to that guy that's sitting there now, because some of them might be by sitting there that they're getting the 189s, they're going to be retrenched and so on. So, you know what? At the time that it happens, you think it's the worst thing that's happening to you. But you know what? The sun
Mm,
will come up tomorrow, and you've just got to have faith in who
mm,
you are. The other thing is, remember, if you're in a large corporate and you get that, corporates like to dumb you down a little bit. So corporates don't necessarily want a whole lot of A team players. They want the C's and D's that are just there, that will do a good job, won't get big salary increases, etc., and so on. And then because you might be there, you might be thinking, oh, but I'm not as good as what I think I am. Let me tell you,
mm,
out there, people value what you have, and
mm.
you've just got to, be, I don't know, be faithful about it.
Yeah,
My
and
faith is a
back
big thing.
yourself. That's the one thing as an
And
entrepreneur.
back
You don't
yourself,
back
back
yourself. Who's
yourself.
who's going to back you, right? Yeah.
Oh, well, that's it.
Yeah.
Yeah, yeah. So that's it. Yeah.
Yeah, we end with a quick, what we call rapid fire section. Just 5 questions for you, literally 10 seconds, top of mind answer. It's a bit of a fun thing we do just to get to know the man behind all of the business and everything. So let's start quickly.
That might be quite difficult
One
for
book.
me, a one-liner. I'm a bit of a talker.
Your next meeting's calling, so
Okay. No, sure.
one business book every business owner should read.
Seven Habits, Stephen Covey.
Stephen, I mean, I'm a big fan of Stephen Covey.
Yeah.
Yeah,
First habit, begin with the end in mind. Always,
exactly,
that for me is like a North Star. Begin with the end in mind. Yeah.
precisely. And then number two, what's the best piece of advice you've ever been given?
Many, many years ago, when I started my banking career, my one mentor then said, "Listen here, your career is a marathon. It's not a sprint. It's not where you are now, where you start. It's where you land up that counts."
Fantastic. Third one, what would you tell the 27-year-old Gavin sitting in a Standard Bank branch? Add on another 35 years of experience.
Don't take on all the fights that you have taken on. My nickname when I was a youngster in the bank was Bulldog. If I believed in something, I wouldn't let it go. And sometimes that's to my detriment. So it's not worth fighting all the fights you think that are worth fighting. Just let it go.
Absolutely. I probably shouldn't ask the next question. It's going to get you into trouble. But I said, the one bank you'd most like to do business with today. You can be honest or you can be diplomatic. I'll leave it to you.
Okay. No, to me, I'm brutally honest. I'm brutally honest with clients. I'm brutally honest in my life. So we do a lot of work with Investec. We like doing work with them. We like the way that they operate. We think there's some areas that they can do better, and I chat to the guys about that. But generally, we like to do business with Investec. Yeah.
Fantastic. And then the last question is one, if you could change one thing about the South African business funding market tomorrow, maybe wave a magic wand, what would that be?
Yes, so that's a tough one because obviously with my banking experience, I understand what some of the constraints are. But I think that, they I always tried to get a fund going in a bank that I worked where you lost money, but you learned about the business. And maybe they need to understand, to understand some of the businesses that they want to fund and industries. They need to be able
Mm,
to lose money on it. So within the bank context, create a little fund, learn,
mm.
make learnings out of it, and so on. See where that goes. I could never
Almost
get
like an
that right when I
incubator
was
fund,
there.
yeah. And I guess, yeah, so it's not VC, but it's looking at, maybe in the US, there's
Hmm.
some of that SBA, government-backed
Yeah,
startup,
yeah.
entrepreneurship through acquisition. Yeah, I love that. Gavin, I mean, I think this conversation has been genuinely valuable. I think there's so much wisdom and just authenticity, and I just love the stories. Anybody
Thanks.
listening in today, how can they find you? What's the best
Yeah.
way to get hold of you?
Okay, so on our website, so we have a website, so it's the normal www.gcebiz, BIZ Solutions with the S at the end, .co.za. There's an email address there called Apply. It comes through to me and another guy on it. So, and that you can always send an email directly to me with the heading banking. And that my email address is just simple. It's Gavin at then GCE Business Solutions. I can't remember my email address.
Or LinkedIn, of course.
LinkedIn.
Gavin Ellis on LinkedIn.
That's it.
Exactly.
Look me up on
Yeah.
LinkedIn. Send me a connection. Let's connect. Let's have a conversation. Yeah.
And which golf course? Which is your home course? Because maybe you bump into someone there.
I mean, I think, I play at a Jackal Creek, so that's where I play up here in Joburg. Every Saturday morning there playing with my mates. Don't get to play much during the week these days because when you run your own
You're too
business,
busy.
can't afford to do that. Yeah, yeah. Yeah.
Fantastic. Gavin, absolute pleasure. And to our listeners, if you enjoyed this episode, please share it, like it. If you've never, if you need funding, reach out to Gavin. If you haven't ever had a proper valuation done, reach out to us at bizvalglobal.com. And until next time, keep building real value and join us for our next podcast soon.
Cool.
Thanks, Gavin.
Thanks. Thank you.